I'm Colton. I'm a mortgage professional right here in Saskatchewan, and in the spirits of Halloween, I want to talk about something a little scary. Credit. Don't worry, it's not that scary. But when it comes time to get a mortgage, it is more than just a number. Instead, it can be the difference between a smooth approval and having to jump a few extra hurdles. I'll explain exactly what lenders look at. There's the 5 C's of credit, what scores actually matter in Canada, and how to build your credit either before or during a mortgage. Lenders look at your score, they don't just see a number. Instead, they're looking for 5 things. And those 5 things are known as the 5 C's of credit. So the first one is character. They want to know your track record with money, whether you're on time, you're late, or you just consistently miss payments. And the next one is one of the most important ones. It's capacity. It's your ability to pay. So they'll compare your income with your debts. Then we have capital. This is the amount of down payment or savings that you have. And the more you bring, the stronger your file is. We have what I would say is the second most important C, which is collateral. And that is the property itself. That home is the security behind the loan. And the final C that we have is conditions. Market conditions, job stability, and the type of mortgage that you're looking for. So in Canada, the sweet spot for the best rates and products is 680. Here's the encouraging part. You can still qualify if you have a credit less than 680. Many lenders are fine with anything over 600, and some B lenders will go even lower. Sure, the terms might be a little tighter and the interest rate higher, but it allows you to improve your credit while you're actively building equity. More so, even if you are going with a B lender and you have a higher rate, it's a stepping stone to get the better rates with a prime lender. So how do you actually build your credit from 580, 620 and get it up to that sweet spot of 680 or higher? So you can do this before applying and trying to get your mortgage, or you can do this while actively working with a B lender. So more than just the 5 C's that the lenders look at, there are 5 factors that determine your credit score. There's payment history, which is 35%. You need to make your payments on time. Consistency is key. Even the small bills matter. Amount owed, which is 30%. Keep balances low. Your credit utilization should be at 30% or lower, as this is one of the main factors in building your credit score. Length of credit history, which is 15%. New credit, which is 10%. Don't overload on new credit or make huge sudden purchases. So that vehicle that you're looking at for $40,000, $50,000, those payments are gonna really bring down your purchasing power and could cause you to have to wait a few years before you'd be able to get a mortgage. So it is always better to wait until after you buy a home to make big sudden purchases, and you just don't want too much credit on your file. The types of credit that you have, that's 10%. Mix it up. Variety really helps. And before applying for a mortgage, make sure you check your report, because mistakes do happen. And if you catch something before you apply, it could save you a whole lot of trouble. All of these make up 100% of your credit score. So the most important ones that you can focus on right now is the amount owed, credit utilization, and your payment history. If you are consistent with these, you will get your credit up to an ideal 680, and you can qualify for the best rates. Think of credit like going to the gym. It takes consistency, small steps, and that will lead to big rewards. It's not just going to be something that happens overnight. So here's the takeaway. Lenders will always look at more than just the score itself. Yes, 680 is the magic number, but don't let that deter you from getting a home, because it is possible if you have a lower score. But if you want to wait until you get that number up to 680, then that is fine too. But that's where a mortgage broker can really help you out, because we have access to all these different lenders, A lenders, B lenders, and we can find a solution for you. And the good news is that credit can always be built up. It takes longer because it goes down a whole lot quicker than it goes up, but it's possible. So if you found this helpful, make sure you subscribe for more mortgage basics made simple. And if you're not sure where your credit stands, reach out. I'll walk you through all of your options.